Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by Notebook LM AI, this series brings you clear, meaningful insights into finance and beyond. In Episode 9, we delve into the enduring nature of Bitcoin's 4-year cycle, even amidst its growing mainstream adoption. We'll explore how Bitcoin's halving events, occurring approximately every 4 years and reducing mining rewards by half, create supply constraints that significantly influence its price dynamics. Despite the surge in institutional investments and the approval of Bitcoin ETFs, these fundamental supply-demand mechanics continue to play a pivotal role in Bitcoin's market behavior. Join us as we analyze the interplay between Bitcoin's intrinsic economic principles and external market factors, shedding light on why its cyclical patterns persist.
Welcome to the Deep Dive. Today we're tackling a question I think a lot of our listeners are wrestling with. It's this whole thing with Bitcoin. Why does it seem to have this unshakable 4-year price cycle? You know, you'd think with all this talk about Bitcoin going mainstream, things would be more stable by now, but it's like this heartbeat that just keeps on ticking.
Yeah, it's a fascinating puzzle for sure.
It really is. So we're going to dig into this article called Why Bitcoin Will Maintain Its 4-Year Cycle Despite Mainstream Adoption. See if we can crack the code together.
Sounds good. It really is fascinating. Like, you have this surge in mainstream adoption, right? Things like Bitcoin ETFs. Those are making it easier than ever for just the average person to get involved.
Right.
But on the other hand, you have this underlying technology.
Yeah.
And it's got its own set of rules. And those rules, well, they seem to be kind of dictating how the market behaves.
Yeah, it's like this underlying heartbeat that I was talking about. Just keeps on ticking no matter what's happening on the surface. So at the heart of it all is this thing called halving. Can you break that down for us?
Absolutely. So imagine Bitcoin as like a story, a constantly evolving story. Every 4 years, there's a major plot twist.
Okay.
And that twist is the halving. Basically, the reward for mining new Bitcoin. It gets cut in half. And this isn't just some random event. This is programmed right into the code of Bitcoin. It's a fundamental rule. It can't be changed.
So it's like a built-in scarcity mechanism.
Yeah.
Like less Bitcoin is coming into existence, but demand keeps growing, especially when the price starts going up. So what happens there? What's the net effect?
Well, think of it this way. If the reward for mining Bitcoin drops suddenly, then the miners have to sell their Bitcoin at a higher price just to break even.
Oh, I see.
Their operating costs essentially double overnight. So they have to adjust their strategy if they want to stay profitable.
Makes total sense. Just basic supply and demand, but playing out in a very unique way. Now let's talk about those ETFs again. We saw the first ones approved in 2024. It was like opening the floodgates for this whole new wave of investors.
Right.
And a lot of people thought this was it. This was the thing that would finally break the cycle.
Yeah, a lot of folks thought that. And the initial impact was undeniable. I mean, we saw a price jump early in the year. It was fueled by all that excitement around ETFs.
Right.
But then something interesting happened. The price settled back into a pattern that looked a lot like previous cycles.
Wow. So it was like this momentary blip and then right back to the same pattern. So does that mean these big institutional investors aren't really calling the shots?
That's a great question. I mean, everyone assumes they bring more stability.
Right. They're not as prone to those knee-jerk reactions.
Exactly.
Like someone checking the price on their phone every 5 minutes.
Exactly. But it's important to remember that even with ETFs, a lot of Bitcoin is still held by individuals, like just regular people.
Really?
Yeah. A 2024 survey actually found that 55% of Bitcoin holders in the U.S. are individuals, not institutions.
Wow. So even with all this talk of Wall Street taking over, it's still mostly driven by individual investors.
Yeah, pretty much.
So people like you and me.
Exactly. And that's key to understanding why this 4-year cycle persists. Because individuals, well, they're more influenced by news cycles, you know? Social media hype, fear of missing out, all that.
Makes sense.
They're quicker to buy or sell based on sentiment.
Yeah.
And that can create those big swings that we see in the price.
So the psychology of the individual investor is almost as important as the technical aspects of Bitcoin itself.
I think you're absolutely right. In fact, you could even argue that those psychological factors are kind of amplified by halving.
Okay, now I'm intrigued. Tell me more.
So think about it. When halving happens, it creates this sense of scarcity,
Yeah.
this feeling that Bitcoin is becoming even more valuable. And this naturally triggers FOMO. that fear of missed out, especially among those who, don't really have a deep understanding of the long-term implications.
Oh, so it's like a self-fulfilling prophecy almost.
Yeah.
The halving creates this narrative of scarcity, which drives up demand, which pushes the price even higher.
Exactly. And then on the flip side, when the price starts to drop, you have the opposite effect. Panic selling. People see their investment losing value and they just want to get out, which drives the price down even further.
So it's this constant push and pull between FOMO and panic, all happening against the backdrop of halving, which just keeps repeating every 4 years.
Exactly, like this built-in volatility that's almost impossible to escape, even with more institutional money coming in.
So for our listener who's maybe just starting to dip their toes into the world of Bitcoin, what's the key takeaway here? What do they need to understand about these cycles?
Well, first and foremost, they need to understand that volatility is inherent to Bitcoin. It's baked into the code. Don't expect a smooth ride, even with ETFs in the picture.
So those dramatic upswings and downswings, those are probably going to continue even as Bitcoin becomes more widely adopted.
Yes, most likely. That's why it's crucial to have a long-term perspective. You can't just look at short-term price fluctuations and make emotional decisions based on, FOMO or panic.
Yeah.
You need to understand the underlying forces driving those fluctuations. And those forces are deeply connected to human psychology.
So it's like you need to be a student of both the technology and the human behavior that surrounds it. Which brings us to another fascinating layer of this whole cycle discussion, the impact of broader economic trends. Because it's not just about what's happening within the Bitcoin ecosystem, right?
It's not.
There are these larger forces at play that can influence how Bitcoin behaves.
Absolutely. And in fact, when we start looking at things like monetary policy, we see some really interesting correlations with Bitcoin's cycles.
Yeah, it's fascinating. Bitcoin often reacts to what central banks are doing with their monetary policy. Things like interest rates and quantitative easing.
You mean those big levers they pull?
Yeah.
That can make the entire economy speed up or slow down. I have to admit, those things can feel pretty abstract to most people. So how do they actually affect Bitcoin?
Okay, so think of it this way. When central banks are pumping money into the economy, that's quantitative easing, or QE. It's like they're creating this rising tide that lifts all boats, including Bitcoin.
Bitcoin is often seen as a hedge against inflation, a way to protect your purchasing power when the value of traditional currencies is going down.
So in those easy money periods, Bitcoin tends to thrive. But what happens when the central banks switch gears and start tightening things up?
That's where it gets interesting. When we move into a period of quantitative tightening, or QT, it's like someone's hitting the brakes on the economy.
Okay.
Investors get more risk averse. They pull back from those speculative investments, and Bitcoin often takes a hit.
So you're saying these macroeconomic trends, they can actually amplify or dampen the effects of halving. So it's not just about the built-in scarcity of Bitcoin. It's also about the overall economic context.
Exactly. It's like these two forces are intertwined, creating this complex dance that drives Bitcoin's price cycles.
Okay.
And that's why it's so important for investors to understand both the technical aspects of Bitcoin and the macroeconomic environment.
Okay, this is starting to paint a clearer picture for me. So we have having this recurring event that creates scarcity and that triggers those predictable psychological responses. And then we have these broader economic trends that can act like a tailwind or a headwind, depending on what the central banks are doing.
Yeah.
But there's another piece of this puzzle we haven't really touched on yet. The different types of Bitcoin holders and how their actions influence the market.
Right, because it's not just a simple dichotomy of institutions versus individuals. Within those categories, you have a spectrum of investors with different time horizons and different strategies.
So can you elaborate on that a bit?
Sure. You have those short-term holders. They're often driven by news cycles, social media hype, that FOMO we talked about earlier. They're buying and selling based on short-term price movements, trying to ride the waves and make a quick profit.
Oh, so they're the ones who are most susceptible to those emotional swings, that fear and greed, the things that can amplify the cycle's volatility.
Exactly. And then you have long-term holders. These are the folks who believe in Bitcoin's long-term potential. They're less fazed by those short-term fluctuations.
Right.
They might even see those dips as buying opportunities, a chance to accumulate more Bitcoin at a lower price.
So their actions would actually have a stabilizing effect on the market.
To some extent, yes. They're less likely to panic sell during a downturn. And their steady accumulation can help provide a floor for the price. But it's important to remember that even long-term holders aren't immune to market psychology.
That's a good point. even if you believe in the technology, it's hard not to be influenced by those price swings.
Right.
Especially when you see your investment going up or down by, significant amounts.
Absolutely. And that's why it's crucial to have a clear understanding of your own investment goals and risk tolerance. Are you in it for the long haul? Are you comfortable with volatility? These are questions you need to ask yourself before jumping into the world of Bitcoin.
It sounds like knowledge is truly power in this market, even more so than in traditional financial markets.
I would definitely agree. Because with Bitcoin, you're not just investing in a company or a stock, you're investing in a technology, a protocol, an idea.
Right.
And to truly understand that investment, well, you need to go beyond the price charts and really delve into the underlying mechanics, the psychology of the market, and the broader economic forces at play.
So for our listener who's trying to make sense of all this, what are some key things they should be paying attention to? What are the signals amidst all the noise?
Well, I think the most important thing is to focus on the fundamentals of Bitcoin, the things that genuinely impact its value, not just the hype or the speculation, but the actual real-world usage and growth.
Like what specifically?
Things like adoption rates. How many merchants are accepting Bitcoin as payment? How is that growing over time? Network security is crucial. How secure is the blockchain against attacks? Has it proven to be resilient? And then there's development activity. How many developers are building on the Bitcoin blockchain? What kind of innovation is happening?
So it's about looking beyond the price and really understanding whether the technology is actually delivering on its promises.
Exactly. And then there's the macroeconomic layer we talked about earlier, things like interest rates, inflation, quantitative easing versus tightening. These are all factors that can influence Bitcoin's price, regardless of its underlying technological advancements.
So we've covered the technical, the psychological, the macroeconomic. Is there anything else investors need to be aware of when navigating these cycles? It feels like we're looking at a multi-layered puzzle with Bitcoin at the center and all these different forces pulling at it.
Yeah, and there's one more layer I think we should touch on. It's the broader societal trends. These can really influence how Bitcoin is perceived and valued.
Okay, now you've got me really curious. What kind of trends are we talking about here?
Well, think about things like technological innovation, geopolitical shifts, even changing demographics. For example, as younger generations enter the market, the ones who are more comfortable with digital assets, that could create a whole new wave of adoption and investment.
It's like Bitcoin is this mirror, reflecting all the ways our world is changing. The more uncertainty there is in the traditional financial system, the more appealing something like Bitcoin becomes.
Exactly. Or let's say there's a major geopolitical event, something that shakes people's confidence in traditional currencies. Well, Bitcoin could be seen as a safe haven because of its decentralized nature.
This is so much more nuanced than just, looking at price charts and trying to guess where the market's going. It feels like understanding Bitcoin requires you to understand the world itself.
I think that's a great way to put it. Bitcoin exists within this complex web of interconnected systems and trends. The more you understand those connections, the better equipped you'll be to make informed decisions.
Okay, so let's recap everything we've learned today. We started by exploring the halving, this fundamental event that creates scarcity and kind of sets the stage for those 4-year cycles.
Right.
Then we talked about the psychological factors, how those cycles trigger feelings of FOMO and panic.
Especially among those individual investors.
Exactly. And then we talked about how macroeconomic trends, things like central bank policies, can really speed up or slow down the price of Bitcoin.
Right, like a tailwind or a headwind.
Yeah, exactly. We also touched on the different types of Bitcoin holders, short-term versus long-term, and how their actions can either add to or reduce the market volatility.
Right, and how those different groups respond to those psychological factors.
Yeah, for sure. And finally, we explored those larger societal trends. Things like technological innovation, geopolitical shifts, changing demographics, the things that can really shape how Bitcoin is perceived and valued.
Right. It's important to remember that all of these factors are interconnected. They don't operate in isolation. They all influence each other. And that creates a really complex and dynamic system that can be really hard to predict.
But even though we can't predict the future, understanding these forces can help investors make more informed decisions, manage risk more effectively, and hopefully avoid some of those emotional pitfalls that can lead to bad outcomes.
Absolutely. Knowledge is power, especially in the world of Bitcoin, which can feel really opaque and intimidating to newcomers.
So if our listener wants to keep learning about all of this, where would you suggest they go?
Well, the article we discussed today, Why Bitcoin Will Maintain Its 4-Year Cycle Despite Mainstream Adoption. That's a great starting point. It's written by Chaos of Money. And they actually have a great podcast, too. They delve into all of these topics in even more depth.
I second that recommendation. Chaos of Money is a must-listen for anyone who wants to understand the future of finance. Not just Bitcoin, but the whole landscape.
And remember, the key is to stay curious. Keep learning and never stop questioning. The world of Bitcoin is constantly evolving, so the more you understand, the better you'll be able to navigate the challenges and the opportunities that lie ahead.
Thanks for joining us for this deep dive into the fascinating world of Bitcoin's 4-year cycle. We hope this episode has given you a better understanding of all the forces at play and empowered you to make more informed decisions about Bitcoin. Until next time, keep those brains engaged. And remember, knowledge is power.